Nvidia stock is the subject of today's video, folks. Oh boy, do we have one to react to here. Actually, two videos for me to react to, okay? Nvidia, this first one from the man they call the Dean of Valuation, saying that Nvidia is worth $240 a share. Nvidia yesterday was trading at over $500 a share. So if you believe it's worth $240, then you believe it's over 100% overvalued. That's a huge statement. So I want to listen to what this gentleman has to say, kind of give my opinions and perspectives on this as somebody that's unbiased. I don't have any short positions on Nvidia. I don't have any long positions on Nvidia either. I used to own Nvidia many years ago. I don't own it at the moment. So I just want to kind of give my perspective on if Nvidia is actually overvalued or if it's actually undervalued right now, okay? So we'll talk about all that, and then I want to react to this one, which I think is very important. Snowflake CEO, and I'm not sure how many of you guys actually got to see this here today. The Snowflake CEO basically said they're stockpiling chips. Now, that's a very scary thing, okay? And I'll explain in a moment why that's such a scary thing. So, yeah, two videos for me to react to. I appreciate everybody being here as always. Thanks so much, folks. I want to jump right into this. If you want to support the channel, do so on Patreon. That will be the pinned comment down there. I am buying stocks or maybe selling stocks in my Patreon portfolio tomorrow to see the moves I'm making in there. Check out the pinned comment down there. And also, sincerely, thank you, everybody that supports the channel on Patreon. I appreciate y'all. And also, thank you for being subscribed. 34,000 plus subscribers now. Holy smokes.
Motorin, NYU Stern School of Business Professor of Finance. We like to call him the Dean of Valuation. Aswath, what is Nvidia worth?
Now, my estimate, it's worth about $240 a share. But I mean, let's start with the good news. I mean, this is an amazing company. It's a company that's managed to find markets just ahead of growth and kind of dominate those markets. Gaming, crypto, AI. At this stage, you've got to view them as an opportunistic company, a company that manages to do this over and over again. It's not just lucky. That's the good news. The bad news is, when you're pricing Nvidia at $450, $500 per share, you're not just assuming that they will dominate the AI market, even if it's a big market, but there are other markets out there that we don't even know about yet that Nvidia will find a way to dominate. Could that happen? Yes, but I'm not going to pay upfront a premium price on the assumption that they will find markets that are undiscovered and dominate them.
At the same time, though, you're not selling all your Nvidia stock, right?
No. And I think that reflects the mixed feelings I have about the company. I mean, I was lucky enough to get in at the right price. It's made me more than enough money for me to view it as a great investment. But at the same time, there is enough of a tail on the distribution, a chance that they will pull off this, with this exceptional drop that might make them worth 600 or 700. I wouldn't buy them at today's price, but to the extent that you bought them a way back at the right price, and if you have them in your portfolio, I wouldn't argue with you if you said, I'm going to let the stock run.
So that's an important distinction, right? Because I've been bringing up earlier.
So, what this gentleman's talking about here, and we'll get into the valuation part. I want to finish hearing him out in regards to this before I start going in on valuation part. But, I think one of the mistakes, his thought process here is, and I battle with this all the freaking time. The amount of times I've battled with this over the past 15 years, a long damn list. It's a situation where you buy a stock, goes up a lot, and you think, I don't want to buy anymore because it's gone up a lot. It's not a good reason at all, okay? And if he really thinks Nvidia is worth 240, then I struggle to believe he actually knows what Nvidia is actually up to and what they're doing here. But that's maybe a subject for a little later on in the video. But I've done this so many times where I've made this mistake where I buy a stock, it goes up a lot, and I either sell the stock way too soon, including Nvidia. That happened to me back in the day. I used to own Nvidia, and I forecast everything that's happened with Nvidia. I forecast the whole damn thing. AI, how this was going to grow into one of the biggest companies in the world, one of the most dominant companies of this decade. I nailed it. And I sold all my shares after I made a little bit of profit. Stupid move. Dumb move, okay? Another good example is Elf on a Shelf. It's a stock I'm up like 1,700% on. Instead of buying more shares as that stock went up, and as the business fundamentals got better, I sold shares, and I sold shares, and I sold shares. Bad decision. I wish I held as many shares as I used to hold in regards to Elf, because the company just execute on a very high level. Just because a stock goes up a lot since you bought doesn't mean it's actually not a buy. Many times, that could be the biggest sign that you should be buying a lot more shares when you look at the fundamentals, and they're just getting better and better and better and better than when you invested. And if you invested in Nvidia a year ago, the business fundamentals are not just a little better than they were a year ago, they're like 10x better than they were a year ago, okay? That's night and day difference in where this business model is. So that's just something to kind of keep in mind there.
Week, Apple more than 10 years ago, when people were saying, hey, this doesn't pencil out. Here's how many iPods they would have to sell, how much they'd have to dominate the digital music market for them to be worth, and not just digital music, all music, for them to be worth this much. Yeah. I mean, they didn't see the iPhone coming. Nvidia is in a similarly unique position to become a game-changing tech player. And if you believe they could do that, then it's worth more than this, right?
It's already a game-changing tech player. They don't have to wait to get there. $1 trillion is a special number, and they've become pretty close to $1 trillion company. I think the question is whether they can take the success they've had over the last decade of being in the right place at the right time and continue to play it out on other markets in the future. There's a chance they can do it. And I think that's why I'm holding on to half of my holding. But I think also you've raised the ante. Now others are aware of the payoff for being in that right place at the right time. So the question is, can they keep off the AMDs, the Intels, and the other players who are going to try to come after them over the next decade? Because the game's just starting.
Okay, what was it?
So when it comes to major innovation cycles, and I think this is important, everybody understands this, okay? When you're talking about major innovation cycles, in super innovative products, keep this in mind, okay? You don't just replicate that overnight. That's very tough technology that many times it takes, everybody else is years behind, right? Think about the iPhone back in the day and how amazing that experience was. If you experienced that back in the day, for some of the older folks that might be watching this that were, experienced the first iPhone or the first couple generations of iPhone, magical freaking experience. It was like nothing you had ever used before. How just easy, you would flip through the apps and just the whole experience was crazy, right? And it took other competitors years to catch up where, nowadays you can use Android devices that are pretty much just as smooth as Apple devices, right? But it took them years to kind of get to that place. It wasn't like overnight. I remember I bought a Huawei smartphone. It was my first smartphone. It actually wasn't an iPhone. That thing was a piece of junk. Like, compared to an iPhone, when I got my first iPhone, it was like night and day difference how bad that was as an Android device versus an iPhone back in those days, right? It takes years. So everybody assumes like everybody's just going to catch up to Nvidia when all these companies are clearly behind, right? Remember, AMD just reported revenues down 18% year over year. Nvidia just reported revenues up over 100% year over year, right? AMD is clearly behind. They should maybe be able to catch up to Nvidia, but they're behind right now, right? Can Intel catch up to Nvidia? I'm not so convinced of that. For Intel, I think their best bet is partnering with Nvidia and hopefully helping make the chips in the future and those sorts of things for Nvidia. So, yeah, man, people just act like this stuff's just, it's so easy to replicate. It's like, no, when you got game-changing technologies, you don't just duplicate that overnight. That takes years to get to where that company was at. Not even where it's going, right?
You gave 210 a share? Was that what you said?
240.
240. Okay, I guess that's better. So, but even 240 a share, that's like down almost 50% from here. So that's my challenge. I understand you say you wouldn't buy it here, but you seem to be saying even if it went down to 300 a share, people shouldn't buy it. Like, okay, you're good. You've had it for a long time. You're in the money. But what kinds of calculations can or should an investor who doesn't feel like they have enough Nvidia use to justify buying it before it gets down to 240?
No, that's a good question. I think it really depends on how you see the AI craze playing out and how dominant you think Nvidia will be in that space. The larger the potential AI market and the more likely it is that Nvidia will dominate the market, the higher the number becomes. 240 becomes 280, becomes 320. And I think that's a judgment you've got to make. But this is a stock that's had near-death experiences. I mean, sometimes investors look at companies like Nvidia and say, I could never buy a stock like this. It's so richly priced. I mean, this stock was $30 6 years ago. So, and it's had near-death experience of it's dropped 50, 60, 80%. These are companies where if the momentum shifts, you can very quickly see a route in the other direction. You've seen this on Tesla. And I think you could see this in Nvidia as well. So if you haven't been lucky enough to add Nvidia yet, I think that there will be a point somewhere in the next year or two when fear is greatest. You will not feel comfortable buying Nvidia at 150 because everybody's going to be fleeing. These same equity research analysts.
He just said, whoa, that's a big statement. He said, you won't feel comfortable buying Nvidia at 150? 150?
I think that there will be a point somewhere in the next year or two when fear is greatest. You will not feel comfortable buying Nvidia at 150 because everybody's going to be fleeing. These same equity research analysts who put out buy recommendations with the stock it's 470 are quick to put out sell recommendations with the stock it's 150, which makes you wonder why bother with equity research in the first place. You will be buying in a moment of fear, but I think there will be moments with Nvidia where it'll become a good investment again.
Okay, so a few things there. First off, in regards to like Nvidia used to be $30 6 years ago, those sorts of things. It doesn't really matter. It's irrelevant where a stock was in the past, right? No different than I'm buying a lot of PayPal shares right now. It's like me saying, well, PayPal was $300 a few years ago, so that means it needs to be $300. Like, it doesn't work like that. Just because Nvidia used to be $30 doesn't mean it doesn't deserve to be $1,000 today. And just because PayPal used to be $300 doesn't mean it deserves to be $300 today, right? And just because Shopify used to be $150 doesn't mean it should be $150 today, right? All those sorts of examples, right? Now, is Nvidia's fair value $240? Okay, well, to get to an answer like that, we got to ask ourselves a few questions. Could the business deteriorate so massively that it pushes the valuation down, let's say 50% from here roughly? That's a potential. Let's say Nvidia fulfills all their demand, right? And, Nvidia's got this insane demand right now, so they obviously sell a ton of chips. The current quarter we're in, next quarter, maybe the first quarter of 2024, and maybe a little bit in the second quarter, but then all of a sudden you start seeing a major, oh boy, the orders aren't quite coming in, and next thing you know, maybe we're in a recession at that time, like an official recession finally maybe, and companies are really pulling back. They double, triple order, which we're going to get into the Frank Slootman, Snowflake CEO, in just a moment and kind of hear what he has to say. And all of a sudden you're in some sort of dynamic where Nvidia's revenues went from skyrocketing to they're actually declining, right? I can understand getting to 240, but that's where things get tricky here, okay? Because the bottom line is, Nvidia today, right, based upon this year's numbers, and by the way, analysts are going to bring up all their numbers, so the Seeking Alpha number is probably going to change over the next several trading days. Really, Nvidia is trading at probably about 35 to 38 times this year's numbers, right? So if you think it should be 240, then really they're trading at about 17 to 20 this year's numbers, which means it's trading the same with the market in general, which trades at a 17 to 20. Does that make any sense when a company's growing revenues triple digits? The answer should be absolutely not. So the fact that you would throw 240 out there is basically a belief that Nvidia's demand is not real. It's going to completely collapse very soon, and that's why it's worth 240. Because if to price the stock at a 17 to 20 times this year's numbers in terms of earnings doesn't make sense when the company's growing revenues triple digits, right? So if this is really truly a multi-year play out like Jensen's talking about here, right? And he mentions $1 trillion worth of data centers all moving to accelerated computing. And if you listen to that conference call like I did last night, you're going to hear this man talk about everything that's going on here, right? And has Jensen proved us wrong? No, he's just proved us right over time, right? So to throw at 240 is laughable, really, really laughable, unless you're convinced that this is just a couple quarter thing and then, demand's not going to be there anymore in the future. Outside of that, it's almost, it's just ridiculous, to be quite frank, to put that sort of number out there, right? Now, at 470, if you say this company's trading at 7 times this year's numbers, 38 times, something like that, okay? And you say, well, there's a lot of risk if this, if their growth rate slows to, let's say, 5%, 10% next year, 15% from triple digits. I could understand, yeah, that sounds about fair, what the stock's trading at right now, not 240, right? But the other question is if this is actually real demand that's going to be years lasting, then Nvidia is actually far undervalued. Because if you got a company that's growing revenues triple digits and they're growing their bottom line at nearly 10x, remember this company nearly 10x their bottom line, right? then the truth is the forward P, or, you know, in terms of just this year's numbers, I'm not even talking about next year, I'm just talking about this year's numbers, you should be paying anywhere from 250 to 350 times. But once again, that gets into, well, is this actually lasting demand that's going to last for many years, or is this just a few quarter thing? So that's where the fun comes in with Nvidia, and that's why Nvidia could be $1,000 or $2,000 stock in a matter of 24 months. And there's also a potential it's a $240 stock. There's both those scenarios to play out here, but it's really going to come down to what type of demand are we really talking about here. If Jensen, one thing is, if Jensen brings it like he's talking about bringing it, yeah, the stock's actually significantly undervalued right now. But the fear factor is these companies hit a recession, they cut back on spending massively, and they're like, we don't need all these higher end chips right now. We're cutting back, we're cutting back, we're cutting back. If that's a scenario, then all of a sudden demand starts going like this, and next thing you know, you get price compression all at the same time while, let's say, AMD's coming in the market. That's how you get that stock down to 200 something dollars, right? Now, with that being said, I want to hear what Frank Slootman has to say, the Snowflake CEO, in terms of stockpiling these chips, because one of the big fears right now around NVIDIA is everybody's double, triple in ordering all these chips. They're ordering way more than they need, and it's making NVIDIA's revenues look insane. But the problem is they're ordering way too much, and there's going to be a get back for that. And that get back's coming. It's coming in the back half of 2024 and into 2025. That's a view, right? But we haven't really heard any major CEOs of companies necessarily say they're just ordering tons of chips just to order tons of chips, even if they're not using them right now. This is the first CEO to say this. Listen.
Lower today with much of the rest of tech after reporting earnings yesterday in overtime that topped expectations. After the analyst call, I spoke with the CEO, Frank Slootman, about how the enterprise spending environment has stabilized since the negative shock late last year.
A couple of quarters ago, we were sort of living through, a bit of what I might call a reset, where the dominant theme of conversation with customers was, hey, we need to fit within our contract, make it last, figure out, how to do it. So very much conversations with unnatural acts.
And that means they have to have their data in the cloud and with the right safeguards, which is a good argument for Snowflake. Now, I pressed Slootman on the question of whether the demand we're seeing for AI right now is steady and reliable, like the demand for NVIDIA chips. Does that reflect the economic value companies are getting right now? He said not yet.
AI is not going to be cheap. I mean, somebody is paying for these wonderful NVIDIA results. There needs to be a business model that's associated, with the technology. One of the great things about search when it showed up was not only that search was great technology, but they also had a business model to pay for it, right? We need that here as well. Otherwise, it's fun and game and just an expensive hobby. And that's not going to last. We're going to get disillusioned very, very quickly. So all of these things are going to have to get sorted, and we are going to sort it. I'm super confident that we will.
I'm wondering to what degree people might be stockpiling chips and demand being pulled forward. I'm wondering to what degree people are experimenting versus starting to ramp on a steady, more predictable, growth state of AI investment. Are we on that steady growth state of the AI portion yet, or is that still getting filled out?
Not in my view at all. I mean, there's a frenzy out there because everybody believes that the hardware is very, very scarce, and it becomes scarce the more people think that it is scarce because they, as you said, they start stockpiling it. We are actually part of that equation as well. We will literally buy GPUs, whether we can use them or not, because we think we will be using them, right? But we're speculative and we're ahead of the curve. So we absolutely have not settled into, some semblance of stable demand. We're nowhere close to that at this point in time.
Yeah, if I was playing NVIDIA, man, you know what I'd almost be more tempted to do than just buy the stock straight up? Almost be tempted to buy like $550 strike price calls expire, let's say, very end of 2025, beginning of 2026, and maybe some 350 puts, because it just seems like NVIDIA's in a position, especially over this next 12 months, where it's going to have some absolutely mind-blowing moves. Let's say NVIDIA comes in with another great next quarter, and let's say they put a guide out for 24, and the guide just blows everybody away. oh my gosh, that's the blow off the top phase for Nvidia at that point in time, right? And Jensen's like, this is a multi-year dealio, right? Well, gosh, your calls are going to print money in that situation. You can go ahead and sell out of those, take your profit. Let's say there's some other scenario that plays out where all of a sudden it looks like on a sequential basis, growth isn't quite there after next quarter, right? And let's say the stock market shakes up. Can Nvidia go back down to the 300 range or below, right? Certainly. And so that's a position where your puts would be looking really, really well, right? And so, yeah, it almost seems like that might be a somewhat attractive play from kind of that perspective. So anyways, appreciate everybody joining me as always. Thanks so much for being here, folks. Hope you got value out of today's video. I appreciate y'all always being subscribed, 34,000. Also, thank you sincerely to everybody that supports the channel on Patreon. I appreciate y'all. If you want to support the channel on Patreon, check out the pinned comment down there. You get to see the moves I'm making in the market tomorrow. Much love and have a great day.